I hate the question, but it's easy. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency. Every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, But look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry, and there are definitely use cases for it, and there's utility for it, clearly. But there's different utility for Bitcoin, and I think that they're as a base layer, there are going to be a lot of things built on Bitcoin in second, third layer, and they're going to be important to the financial system. And so that having a trustless system like this is it's revolutionary. It's going to change the financial world. And if
James Lavish highlights the increasing incorporation of Bitcoin into the conventional banking system as one of the most significant phenomena. He highlights that a new era is upon us, one in which institutions will view Bitcoin as a valid form of collateral rather than as a fringe asset. More banks are starting to view Bitcoin as a potent financial instrument rather than just a speculative investment, according to Lavish, as regulatory certainty increases. The creation of structured financial instruments, such as credit facilities and loans backed by Bitcoin, is made possible by this change and provides people and companies with liquidity without requiring them to sell their Bitcoin. Lavish asserts that this is particularly crucial for long-term holders who wish to preserve their exposure to Bitcoin's growth while simultaneously increasing its value. Lavish thinks we're at the beginning of a financial revolution where Bitcoin plays a major role in credit markets, wealth preservation, and institutional balance sheets, as institutions increasingly acknowledge its stability and scarcity. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Yeah, so first things first, Bitcoin does move off of liquidity. We know that. And like I said, it's because it's being treated like a risk asset. So as liquidity expands, Bitcoin follows. It lags by about 3 months, somewhere around 2 or 3 months. And so we saw liquidity drained at the end of last year. And so now it's coming back up, but Bitcoin's it's still lagging. It still hasn't, if you chart them against each other, it still hasn't reached that bottoming out on liquidity. When it, after it does, it will start to rise again. Maybe it has gotten pretty close here in the last couple days. But so that is important for there to be liquidity. But let's just face it, there's no long-term liquidity will go higher, the money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. So we will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality. And so now the banks, this is the big deal, is the banks can actually hold Bitcoin as an asset and build products around it. They can build lending products. They can build collateralized products. They can do things that they couldn't do before. And it's a really big deal that if you have Bitcoin and you can work with your bank, whether it's JP Morgan or, or if it's Wells Fargo or Chase or Citibank or whatever it is, you can work with them to use your Bitcoin as collateral for things, or they can create collateralized products or lending products for you. It's going to be a big deal, really big deal, because I know there are a lot of Bitcoiners out there who have sit on a massive amount of Bitcoin that they don't want to sell, but they want to somehow monetize to use in their favor. They don't want to pay the taxes on it. They don't want to get rid of it, but they want to find a way to use it. And benefit from it. That's going to be, I think that's going to be a huge deal. And eventually it'll trickle down into things like, mortgages and loans against them and using Bitcoin in just, residential mortgages for collateral. So you don't have to put up your 20%. You can put up 10% cash and 10% Bitcoin or something like that. And it's going to be, I think this is going to be a big deal for both consumers, but really a big deal for the banks. They're going to be rushing to get these products out later this year as they get their head around and get their teams around this. So I think it's going to be a really big deal. And so what does that mean? Well, it just continues to march down that institutional adoption road where you have institutions are embracing Bitcoin in particular, and they're going to be using it to build products and sell products to people. Is it in the best interest of Bitcoiners to go and have banks in control of this stuff? No. But does it help institutional adoption? Yes. And if that's the case, then it ultimately it's good for Bitcoin adoption. It's just a philosophy of whether or not you want institutions involved. It doesn't matter. They're getting involved. And that's kind of it's a big deal for Bitcoin price, in my opinion, and that will affect it over the course of this year and the next year. Even though it's down here under 80,000 today, I actually see this as a huge opportunity for my fund to go and get exposure in places that will give me more upside in this Bitcoin ecosystem because of the price being depressed here. I think it's a little bit of a gift for us. So, but again, I'm a long-term investor. I take a very long-term view on this. And I'm optimistic about the future of it.
James Lavish admits that although Bitcoin has a bright future, investors may find its sudden price fluctuations perplexing or upsetting. He notes that Bitcoin had a significant decline following its recent ascent to a new all-time high of $100,000. However, Lavish sees this decline as a good opportunity to buy rather than something to be alarmed about. He thinks long-term investors might profit from these brief price declines to buy additional Bitcoin at a reduced cost. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
The price of Bitcoin, while the whole market is rolling over, while it's already reached all-time highs and had that euphoria of the Trump impact of the new administration, a positive administration, you've got the ETFs, you got the ETF options, you've got SAB 121 repealed. We're going to talk about that. You've got the gap accounting rule change. Now you've got the ending of choke point 2.0, hopefully soon. I still have seen some things in my hedge fund that suggest it's still happening, but hopefully that ceases very soon. And regulation around all this, regulation around stable coins, regulation around which of these cryptocurrencies are deemed tokens and which are deemed assets, and all of that stuff. Like Bitcoin is the only one that right now is deemed as a commodity. So really, really important to have that clarity. So those are all tailwinds for Bitcoin. So why is it selling off? Well, it reached an all-time high. It hit that $100,000 mental level, and it stayed up there for a little while, and then it sold off. And once it broke back through 100,000, now that becomes a resistance level. And so it's a mental level, it's a major mental level. You had a lot of from what I understand, there are a lot of OGs that have sold around the $100,000 level. They've been holding on to this thing forever, and they've made massive, massive, massive amounts of wealth in US dollar terms that they can go and turn around and use to buy other assets like houses or planes or boats or whatever they're going to do. And so they're cashing in. They're going to go enjoy some of that they held on for so long. And that's what it appears to be happening from what I know. So, however, still price wise, why would it sell off from, 90 something thousand down all the way down to 80,000 from after the news that the strategic Bitcoin reserve was established? In the price of Bitcoin, clearly there was an event-driven trade going on where you had short-term investors looking for this to pop, meaning Bitcoin to run back over 100,000, go to 120, 150, whatever they had calculated in. And they expected that to happen if and when a strategic Bitcoin reserve was announced, along with a purchase plan. But the purchase plan wasn't announced. So whatever amount that they had mathematically factored into the price of Bitcoin had to be taken back out. So just to keep everything simple, if Bitcoin's at $100,000 and these momentum players thought that it could trade to $150,000 if the Bitcoin reserve is announced with purchases, then that's a $50,000 move. Okay, well, if they figure, or let's just say it's 80,000, it's trading at 90,000 because that's where it was. That in that $90,000 is the probability that price would go to $150,000, whatever that probability is, 25%, 30%, 50%, whatever it is. Well, that is telling you that if it was trading at $90,000, there was a 50% probability priced in that it would trade back to 100 at least, right? Because 50% probability of a trade to 110, let's say, 50% probability would mean that the price should be about $100,000 that's expected to go to. Well, it didn't. So you've got to extract that back out of the price. You got to extract that probability that's embedded in that $90,000 price out. And so that takes it back down by that amount. So that's the problem, is that was in the price and now it's being taken out at the same time, Brandon, that you've got all this uncertainty going on. And Bitcoin has acted like the leading risk indicator for a long time now. Whether or not it should be, whether or not that we believe it is, it's what the market believes. And the market believes that it's a risk asset right now, and so it's going to treat it like that.
James Lavish provides a thorough explanation of why Bitcoin is going through a brief sell-off in spite of a flurry of encouraging news that should, in theory, be raising the price. He lists several bullish catalysts, including the approval of spot Bitcoin ETFs, the launch of ETF options, the repeal of SAB 121. Now that Bitcoin is firmly established as a commodity and big banks are beginning to recognize its potential, all indications point to robust long-term growth. However, the market changed course when Bitcoin reached its highest point ever, $100,000. Lavish cites a combination of technical and psychological elements to explain this downturn. To begin with, $100,000 is a huge psychological milestone, but it's not just that. Lavish also explains how investor rumors that a strategic Bitcoin reserve would be released along with a specific, continuous buying plan were a contributing factor in the recent spike in the price of Bitcoin. Lavish is consistently bullish in spite of this volatility. He views this correction as a healthy reset rather than a sign of weakness, giving long-term investors a chance to build up while prices are low. He thinks Bitcoin is still in the early phases of its worldwide position as a financial reserve asset, despite the fact that structural tailwinds are getting stronger and mainstream acceptance is speeding up. In summary, the long-term thesis is still very strong, even though the short-term picture may appear uncertain. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.